Hello traders, Gary Wagner here. It is 12:43 in Honolulu, 6:43 in New York on Monday, 11th day of March 2024, and this is the evening report for gold and silver. It is obvious from the trading range and the candlestick that formed in trading today in New York, which was a doji, that market participants involved in gold are seriously looking at tomorrow's CPI as potentially having a dramatic influence on multiple financial asset classes. In terms of what we saw in New York, gold closed up $2.80. It opened at $21.8760 and closed at $21.89, which means the differential between the open and closing price was very, very small and does fit the definition of a doji. It is already trading overseas, trading at $21.8710. That puts it down $2 on the day and is currently below the close in New York. Silver traded a little bit differently than gold. It gained 16 cents with the most active contract, settling at $24.71.5, but it is trading in Australia, down about 2 cents right now at 24.68.5. After falling for the last 6 consecutive days, the dollar index actually showed a gain today. Trading in New York, it was up 0.16%. The index is currently fixed at 102.85. And when you look at the last 3 trading days, it is a 3-river morning star. I'm going to call it a variation because we would like to see this green candle, the candle that formed today, be much larger than what came in. The key will be whether or not we'll see follow-through buying tomorrow. That would create a confirming green candle and signal the possibility that the dollar is having a key reversal from bearish to bullish. Many people are concerned about tomorrow's CPI report, which in early economic forecasts by Dow Jones and Reuters are suggesting that inflation numbers will come in a little hotter than last month. Month over month could be anywhere between 3 to 0.4% in terms of an increase. We're already seeing the beginnings of a red candle in Australia, but it's much too early to derive any information. It's all going to be dependent on the report tomorrow. If it does come in as hot as forecast, we could see gold go into what I believe will be a shallow corrective period. If that's the case, I put up a Fibonacci retracement. The retracement begins at this low that occurred on the 14th day of February. That was a Wednesday, up to Friday's record high that came in, I believe, at $2,203, the all-time record high. Today, of course, in New York, it traded to a lower high and a higher low, and it did close slightly above the close in Friday's, but it is still a doji, and as you know, a doji is the first thing we look at as a potential pivot. You can see that down here. As the market came down, you got that doji. We had a lot of red candles, this very large red candle, and then our doji pivot, and then we went to a market uptrend. We had one spurt taking gold to about $2,040, a little bit of sideways trading, and then the historical price move that occurred, as I said, last week and began 2 weeks ago. What I do believe is that if we do see a break, we want to look at these various levels. 2154, the 23.6% retracement. A deep correction could take us as low as a 61% retracement, meaning breaking below 2100. But I believe, as strongly as I felt that 2000 was the new base or support, I believe that the same thing will most likely occur for gold at 2100, meaning that it will no longer be resistance as it was here, but rather 2100 will become a level of support. Although we're not seeing any signs of weakness in silver, silver solidly closed above 2460, which is the 38.2% fib retracement from this long data set beginning in October, when silver was trading at roughly $21.50. to this high above $26. So we're not looking to enter until we get more information about tomorrow's inflationary report. Lastly, I do want to take a look at the dollar. And just as gold traded to a doji in today's trading session, we saw a doji created on Friday's session in the dollar, and that was followed by a small uptick today. This is taken from my software program, the Candlestick Forecaster. It does talk about a morning star. It occurs after a strong defined downtrend. We meet that criteria. The second candle must be a star, and that's where the real body trades below the real body of the prior session. That would be this large red candle, and that is followed by a large green candle in a perfect world. I would have liked to see a stronger green candle, but nonetheless, depending on how the report comes out tomorrow, if we do see the dollar continue in its uptrend and we see gold begin to sell off, that would indicate a very strong potential that we're seeing both the dollar pivot higher and gold pivot lower. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.